Hey guys, welcome to my channel. This is a stock market technical analysis channel, and we go in detail into stock charts. So if you're new and you're interested in getting some in-depth technical analysis to understand maybe where stock markets are heading in the future and not where they've been in the past, we don't trade on headlines here, we trade on the charts. So if you're new, subscribe, give me a like, leave a comment. Let's get into the charts. So I'm doing this video over the weekend because oftentimes on the weekend I can look at the charts with a much more calm mind, I suppose. And that's because I'm not actually trading. I don't have positions that are actually moving around on me. So I can just sit there and analyze the charts and get me prepared for next week and really anticipate and get a read on the market to determine if anything's changed from the prior week, or are we at any kind of inflection point or anything like that. So these weekend videos that I put out oftentimes have a lot of value because I am looking at the charts without any trading distraction. So I'm going to start off with gold and gold mining. I've been pounding the table about gold mining stocks, gold in general, for about a year and a half. When gold was down around 1,200, and it's only gone straight up. So we're going to stick with that trend until we see a change. So we just want to keep everything sharp, keep our blade sharp on these gold mining stocks and gold trade. All right, so here's bullion. I was looking at this, and really we'll start off with the weekly. We'll start off with the bigger picture. We've got the rounding bottom obviously in play. And if I zoom in though, here, let me zoom this chart in here. There's the last week right there. Nice big green week. So on the weekly, nothing's broken. I don't see anything telling me that gold is, bullion has changed trend. And we're starting to get a little bit of an uptrend channel here. So if we zoom in, before I leave this chart, here's your range again on the weekly. 1560, 1570 on the weekly for the low, and 1890 for 1900 or whatever for the high. I think we're going up to this 1900. That's what this tells me. It's pointed up. Everything looks good to go up, and I think that's where we're heading. However, just keep in mind on the weekly chart, you can have intra-week drops below the support levels. It's all about where does it close on Friday. So the close on Friday is what matters, and anything that happens intra-week when you're looking at the weekly chart is irrelevant. Let's zoom into the daily here. So here's this uptrend channel that we're starting to mark out. We've got a couple days where we start down here, and then we've got a cluster of days where it held that trend right here. So now we've got an uptrend channel, and we almost came down to it, but stopped really at the very first support right there, which is the weekly support at 1570. Held that. So now this uptrend channel should act as support as we continue to move. So if we come down and tag it, there's your support on the daily. Looks good to me in general, all in all. Nothing really to look at the hourly on this one. So that gives us our macro theme. Gold is in a bull market. Gold is moving higher, higher lows, higher highs. And so we've got kind of the macro thesis there intact. Let's look at the miners. So now that gold's going up, you want to look at the leverage plays, which are the gold miners. So here's Barrick Gold, my preferred proxy. Let me try to get this chart lining up here. All right, so here's the hourly chart. What I'm looking at, well, actually, I spotted this on the daily chart, actually. Let's look at the daily. Let me zoom in here. Okay, so on the daily, we've got, we're moving up. There's nothing that's essentially telling me that this is we're changing it in any kind of inflection point. We pull back a little bit right here, but there's no level that I could say that we're just like running smack into resistance at. I mean, yes, we have this red line that I drew out right here, but it's not a clean resistance. It's just well, never mind. It is relatively clean, I suppose. You've got this line right here at 21.49. So let's call that our near-term resistance. A break above that puts us on the same trajectory that I'm seeing in gold bullion, but puts us, moving higher, and probably ultimately getting up to this 27.78, probably sooner than later, I would assume. The value in gold stocks is going to get spotted by the market, and the fact that they're performing when everything else is not, the market's going to start rushing to the, what's actually performing, and you're going to see money start flooding into these things. That's my take on it. If you zoom out, if you zoom into this hourly chart here, so let's say that's our resistance. But also, on the hourly, we got this bull flag right here. Let's kind of draw that out. Here's your flagpole. We'll call it right there. Here's your flagpole on the hourly. This is your flag. Pretty small flag, but it's a flag. And then here's your breakout flag. Your breakout measured target, basically. If this plays out, then we're going to, if I can get up there, I have to go to the daily to see it. Then we should get up to the measured target of around 23.40. So that's the measured target. But and here's the daily chart flag I want. There's a bigger flag in play here as well. See this big flag here on the daily chart? We've got this flagpole right here. Nice, clean, textbook flag, and then a breakout. So if this flag plays out, we've got kind of multiple flags. We got a flag on the hourly, but we got a flag on the daily, and we have broken out of that and started to move higher. So the measured target for that flag is 24.80. If we get to 24.80 and this flag, this breakout plays out and we hit the measured target, then we're in the middle of this trading range right here that goes back, really on the weekly chart. If we go to the weekly, you can see, this was kind of your support area back in the highs back here. And then we've got this kind of vacuum area where you had a lot of selling. And if we break into the middle of that, I would say because of the momentum, we're running up to 27.70. So 27.70 looks good. I mean, I think that we're getting there. Doesn't mean we will, but I think the momentum and the potential technicals puts us in within range of hitting this 27, 70 or right in there. So just keep that in mind as we start to work our way up there. Here's GDXJ, sorry. So GDXJ, well, same kind of picture. Here's a flagpole. Here's your flag. And we got a breakout. So measured target, that puts us, see if we can actually see it. This charting platform is not always the easiest for me to see it doesn't allow me to get higher if I don't have any charts or price action up above. We're going to have to just evaluate that one as we get a little closer. We've got to figure out a different charting platform to see this one. But clearly above this $37 range, I can tell you it should be roughly 1150 from the breakout point, right up around there. So let's say right around $38 should be the measure target. So that's all I see on that one is really just this flag. And then if you go down to like the hourly, this is the bottom of the flag right here. It's on the daily, it shows better, but here it is on the hourly. And then you can see we ran down, tagged it, undercut it briefly, but look, you got this little reaction right here where you came right, held it, and then chopped above. So if you're interested in this, you could potentially add to this at this support line right around here. So maybe we gap down. I mean, you get opportunities when something's finding support. You get several opportunities to add positions. So you don't have to add it all at once, but you should have opportunities if you're interested there. Again, all this stuff is just trading, my opinion, not trading advice. You have to say this disclaimer garbage, but that's what it is. So just my opinion, all this stuff. Here is GDX. And let's zoom in. We got on the daily here. All right, here's, again, another flag. We've got a lot of these flags. Here's your flagpole. Here's your flag. We break out of the flag. Here's the shakeout move that we saw last week where, prudent investors and traders were added to their gold positions at that time. And the major target for that flag puts us at 36.50. Again, same kind of story. If we get to 36.50, if I go to the weekly, then we're up in this new range. 36.50 puts us all the way up in here. So I could easily see us running up, hitting the major target, and then pulling back to this support here. This would be picture perfect or textbook, I guess. You see a breakout, you run high, and then you pull back. So that's why oftentimes you don't want to take the breakout, because you're going to have a back test. You want to anticipate that breakout. So I think we're going to get there. I think we're going to get up to 36.50 or so. Then we'll pull back, do a back test of this 31 level, and then we should hold, and then start to work our way higher. That's what I see in the GDX. So that one's pretty clean, actually. I might be interested in owning some of this as a way to diversify from Barrick. Let's look at NUGT, 3 times leverage bull fund. This one is not as clean and easy to chart because it's leveraged, but we'll do our best to try to see if we can find some levels here. So we've got this bull flag. Here's your flagpole. Here's a flag breakout, not the cleanest breakout. We've already pulled back, kind of chopping sideways basically. Major target on this would be 40.50, 40.60, somewhere right in there. But it's not the cleanest flag, so it's not my favorite. One thing I do see though is you've got kind of this wedge. So here's the top here, tagged it here, and then we got the bottom, tagged it there, the little cluster right in there. And so there's kind of a wedge. And if let's mark this just so everyone can see it. We'll mark it in purple. And all right, so there's your wedge, and you can see where we're at right now. We're kind of at the apex of that wedge. So should see a move out of this wedge if this wedge is going to play true, and most likely to the upside. But again, it could be to the downside. I'll keep an eye on this. This one's possible for a kind of a short-term trade. We have to look and watch, see what the price action is. But if gold continues higher and my thesis is correct that money is going to start flowing into these miners, then this thing should run. Here's Sabina Silver and Gold. This is junior that I'm invested in personally. I like some of the fundamentals behind it due to the fact that they've got they've got gold deposits in Canada, and I like the Canadian jurisdiction. And if gold deposits and gold continues to rise, then the gold deposits are worth that much more, and everything's just kind of good, and the aura around that is good. So let's look at this. We've got, what do we have? Well, what I see here is we have a flagpole, we have a flag. I drew this channel out a little too far. I was getting a little crazy. Pretty clean. This is a daily chart, so you can see lots of tags of the flag. And here's the top of the flagpole. And we had a breakout, not impulsive, but we had a breakout. We back tested once, back tested again. Here's your flush out move. This is when the panic selling and the forced sales happened, and we've recovered the flag, and we're now just back testing. So I expect this. This is back tested once, twice, and you could call this a back test, I guess, kind of a impulsive flush down, but instant recovery. This would be a third back test. Shouldn't back test too much longer. Should start to run, and if we do run, then the flagpole would be the target, and that's a huge flagpole for this stock. So if that's true, that's going to put us up around this $2.15, and look at that. There's the peak right there. I'm charting this real time, so it's interesting how these levels just kind of fall into play and how the market just it's all math. I mean, so it makes sense. Stocks and charts and everything's traded on mathematical algorithms nowadays. So these things line up a lot of the time perfectly because it's computers doing the processing. So there you go. There's your major. I mean, the major target lines up perfectly with the peak up here to 217. It's a big move from here. I mean, we're at $1, so we're talking about about 100% gain on that one. So that looks good to me. Doesn't mean it's going to play out, but as of right now, technically still looks good. Looks like that's what it wants to do. So until that picture changes, we just continue with the thesis. I might even buy a little bit more on Monday, so we'll see. Here's AEM, another gold miner, a good size one. This thing's holding support, so this thing got pretty choppy. So that's why this one's been a little tricky. But here, if I zoom out, the major support line is this uptrend line right here. Let me mark it out in purple. Okay, so we're at an hourly chart. You got tagged it there, tagged it there, tagged it there. If we go to the daily, just to get a little bit of a bigger picture, there it is right there. It's not, we broke it, okay? So it doesn't necessarily make the strongest case because we did break it. However, we broke it on that big flush out move with the forced selling and margin calls getting fired off. So that, when a margin call is getting fired off, they're going to sell your gold mining stock even if it's above support. They don't care. They're going to cover, they're going to sell that to cover the losses in the other stock. So this could break support regardless of the technicals in a short term because of that, that scenario that potentially played out. But since then, the buyers stepped right back in, bought it right back up, and we've recovered back above support. So let's see how this support plays out moving forward. I think it probably should hold, and what I'm seeing is at least a gap fill, $57, and that should put us up around 7.5%, 8% higher. That looks good to me in general. I think that looks good. But this could go lower. I'd really like to buy this thing down here at this $41 range if I could get it. Newmont. This thing's been on an absolute tear, even more so than Barrick. But that's okay. It's not a whole lot more. This thing's up 23.5% from that flush out move. And you can basically just see that was an opportunity that you could have taken advantage of. People were being forced out of their winning hands, and others saw that and they took advantage of that and bought it, myself included. And so this thing's just up 23.5% from that bottom, still moving higher. Let me see. I don't trade this one, so I don't chart it too much, but we're gonna go ahead and mark it out. Let's see what we can discover here. Yeah, we'll call that. That looks good. So here we were right at support. Big gap down and broke support on the forced sell. Instantly recovered, ramped higher. So there's your support. Anything around the support line, looks good to me as this continues to move higher. I don't see a rising wedge or anything yet in this stock. So ultimately, still looks good for moving higher. Where is it going? Let's look at the daily and see if we can find. Okay, so what I see in this one, you got potential. Here's your potential flagpole, and a flag right in here. Mark the bottom out right about there. So this one might have actually hit the major target already. So we need to kind of keep an eye on that. Yeah, it exceeded it too. So yeah, we'll see about this one. On the daily, maybe we already hit the major target. You can see if I zoom out, I've got this resistance line up here around 55.80. That comes back to a couple reactions along up here. So maybe we run up to there. That might be the target for now. I don't like this one for buying it. If we came down to support, we could maybe buy it. But for now, I'm more interested in Barrick than this one. Freeport McMoran. This is a copper and gold, but they do a lot of copper, so not exactly a gold play. So we're going to skip this one. I was just kind of eyeballing it. AU, Anglo Gold Ashanti. This one's trading sideways. Let's look at the daily here. Still within trend on the daily. Here's your uptrend. And we've got just an uptrend channel. I do not see any kind of bearish rising wedge or anything yet, so still looks good. Here's your resistance, 22.80. A break above that should put us up to 30 bucks, 30.33. So a break above 22.80 looks good for a 32% rise. So this thing, I mean, these gold miners, you can make a lot of money when they're running in your favor. You can lose a lot of money too. So position size is paramount. But anyways, there's, this is your short-term range. You can see we don't have, it's just a vacuum once you get above this 22.80. There should be just a vacuum up to this resistance of 30 bucks. So that looks good to me. Silver, SLV. This one's been just a wild man. I'm out of this one. I'm not really interested in silver right now. More interested in gold and gold mining stocks. This one, you've got, you do have a flagpole and a flag. Here's the major target, but we went the other way on that big impulsive sale, and we've since recovered the flag, but now the flag's just getting way extended. So I have to almost void out this flag for the fact that it's gone. The flag doesn't usually get this long. So, we've been to the top side, we've been to the bottom side. This chart is too sloppy right now. So we have to go back. We have to look at some bigger picture charts. I mean, we've got a little bit of resistance or, trend line right there. I'm actually going to pull this flag off just to not confuse anyone. So let's go ahead and just say that this flag is now void. And we need to look at some bigger picture charts. For now, we'll just leave it like this. We've got reactions along here, reactions here. Kind of got there, didn't quite get there, but big gap up right at that trend line. And also look at this big, let me zoom in, this big impulsive candle right here. Boom. You can see it. And, good volume, kind of a volume spike right at that trend line. So we'll just say this is our trend line right now. And I need a little bit more proof. It's got to prove itself before I feel comfortable with that trend line. So for now, that's what we're going to chart. Wrap up this gold wrap up. Let's look at the dollar. Just a straight plunge down. The dollar can do this, but the last time we've seen kind of action, this much down action in the dollar, let's go back. I mean, back here in 2018, back here in 2016, we saw the dollar falling, and this was before the tax cuts that they did. So the dollar was falling. It looked like we were going into a recession, but then we had the tax cuts, which created this kind of propping up of the dollar. So we're clearly heading down to the bottom of this channel, 94. That's a bigger picture support. It goes all the way back to 2011. You can see this price channel of the dollar probably goes back farther. Let's look at the weekly. No, it goes back to 2011. So there's your price channel. We should hold that, but you know what? If we're going into recession, we're going to break this and start to head lower. So, and I think that's where we're going. I think this will head lower. Gold's been kind of front running the move of the dollar. I think the dollar is probably going to move lower, and gold is going to move higher. All right, let's get on to the broad markets. This one is interesting. I want to look at these broad markets, and then we'll wrap up this video. So, all right, NASDAQ futures. Again, we pay attention to the NASDAQ. That's the index. I think that's the most important to pay attention to right now. Not the be all end all, but where tech goes, the market is going to go. That's been the case pretty much for the entire bull market. So we want to watch for that. And tech is showing kind of relative strength even now in the crash or fall or whatever you want to call it. Tech is continuing to show kind of relative strength. And so that's why it's so important to see that the leader, and watch the leader. If the leader can't hold up, the market can't hold up. So here's the futures, and let's look here at the NASDAQ futures. We've got this chart. I think my trend lines got taken off. So let's see. We've got a downtrend line here, right about there. We broke that. We have broke that to the upside, and we are starting to kind of base out right here. It looks like if we zoom in. So I did mark this out as a. We got another downtrend line right here. Looks like. Sorry, I'm just marking this out as I'm kind of reviewing it or looking at it. I guess we'll plop it right there. So that pop on Friday, maybe we ran right into resistance on the futures. That's what it looks like, I guess. Several tags of that. We overshot it here, but you see the close right there. That validates that trend line. Close right at the trend line. Didn't quite get there, and then we got right to it. So that looks good for now. We could easily see a move when the futures open up. They could move up higher and break this trend line. But for now, we're going to go ahead and just say that. Let's look at this. Potential bullish falling wedge. We got to watch that. That could be a bullish falling wedge. A couple reactions going back there. So that could be a bullish falling wedge here in the short term on the futures. So maybe we go higher. We'll pay attention. All right, triple Qs. When I look at this one, I see a bearish flag. Here's your flag pole. It could be, I'm going to call it right here. Here's your flag. I already had that marked out. And you've got a measured target on the flag of roughly, depending on when we break it, but this flag, is here. Now, I had this flag drawn out on Friday. I think I changed it a little bit, but I had it drawn out as more of a pennant. And if I go to, this is an hourly chart though, so, you could maybe draw it out something like that. And then you could say that this Friday's last hourly close broke above that. But flags can be pennants. They can also be turned into a flag. And for now, I'm going to just give it the benefit, the downward momentum, the benefit of the doubt, and say that this is a flag. We're going to mark it right here, though. I noticed in the after hours on Friday that the after hours, I think, closed. They were right around like 206 or something. So whether that plays true or not, we're going to give the downtrend the benefit of the doubt and say that, okay, this is a flag. Here's a flag pole. Here's your flag. And the measured target moving down puts us at 195. I've already got it marked out because this is the trade that I'm anticipating. That would make a lot of sense. 195. We get some panic selling because we undercut the lows, so we'd see the big volume come in maybe on the undercut right here. Panic selling, volume selling, and undercut the lows, run any stops that were out there on this bounce, break longer term support on this red line right here. This red line is the bull market support line for the last decade. So going all the way back, we break that, and then we have a kickback rally and come back and back test it from below. That keeps this bearish thesis intact that I have. It also does technical damage, but at the same time gives people hope when you break that support and then start to rally and come back and back test it. So I think that's where we head. That's what it looks like to me. I'm not seeing, if I go to the daily, the reason why I don't think like that hourly chart, that last hourly candle is, a reversal, is I'm not seeing any kind of volume spike, panic selling. I saw last week pretty organized selling. I didn't see panic selling. I didn't see complete plunging. I just saw grind, I saw moves lower, of course, but there was no real panic selling. I saw gap downs, and when it gapped down, we just kind of chopped sideways and then maybe sold off a little bit more throughout the day. I didn't see a gap and crap where it gaps down and just the bottom drops out. I didn't see any of that. So for the most part, organized selling and just downtrending action, which is what bear markets do. Bear markets, they sell off a lot harder than a bull market goes up, but I didn't see any kind of panic selling, not like we saw on 2018. In 2018, this right here, just complete down, this was just panic selling that we saw, and then it was reversed. This is more organized selling, just kind of calculated selling. When you get when you get rips, market moves up, people are selling into it. And people aren't panicking, they're just using opportunities to sell into strength. That tells me that's bear market action is what you see. So that's what this looks like. And I think we get down to this 195-ish range again, and then probably rally up to back test this from the top. And then we'll have to see. If we fail it at that point, I'm pretty sure bear market is intact and we're heading down. We're heading a lot lower. Let's just put it that way. So lots of opportunity to make money if this is going to be a bear market. There's a lot of money that has to be unwound from this bull market that we've had over the last 10 years. That was probably a bubble, and that's a lot of money that has to flow out of that and transfer to people who are taking the other side of that position. So that's where I'm looking to be at. I think that's where the money's to be made. I've said for a long time, I think the money in this market is to be made on the downside and not the upside. And that's what I still see. Let's move over to the SPY, and then we'll get close to wrapping up. All right, so this is the weekly chart. This big red candle, you don't see this stuff except for in bear markets. This is a big sell signal on the weekly chart. It doesn't get any cleaner than this. So, you did a full-on back test of the decade-long bull market support line. Here it is right here. Let me roll out. Going back to 2009, here's your support line. Go back and watch some of my other videos. You'll see exactly, this support line. I've called it out over and over. But we did a full back test and a big red piercing candle. That's a sell signal. So I think we get more red in the near future, and big volume confirming. Look at the volume. You had grinding higher, little volume, big red dagger candle with volume. Institutions are selling. That's what this says. So it doesn't get any clearer than that. I would say position accordingly. And let's move to the daily here. This does not look like a reversal candle. Someone's been commenting saying they think the market's going higher next week, which they could be right. I can see their case. I do see that. I do see it technically. I can see their side of it. I could make the case for it. I don't see it as cleanly. It doesn't look. I see more evidence that there's more downside. So this, on the daily, you'll see here the SPY candle. This is not a reversal candle. You want to see some sort of a dragonfly doji, gravestone doji, something like that, where, maybe a island bottom reversal, something like that, island cluster reversal. And we're just not seeing that. So yeah, I could gap higher, but I don't see anything on the daily here on the SPY that tells me that we're going to have a reversal. Now, let's look at this, see if we got any kind of support here. Yeah, maybe. So that could be support right there. On the daily. It's not the cleanest trend line. You've got some days creating that trend line, and we did pierce it right here. So that's, we pierced it again on Friday on Friday, and it held. So yes, this could be support. Maybe we bounce up to this 302. But I still think, and that would make sense. You could gap fill up to 302 and then fail. So that's clear. That's possible. Doesn't mean that's not really a reversal. Yes, from 297 up to 302, it's 1.5% higher, but that doesn't. It's not a reversal per se. That's just a gap fill, and then you move lower. So let's go to the hourly here. So let's just watch this. But what I see is, okay, if we mark this out, you know, you could, I mean, at this point we could say it's the top here. And, you know, maybe it's something like this. I had it, again, I'm going to give the benefit of the doubt to the downside just because that's been the price action. So in that scenario, again, you have a flag, and or you could even say we got a bigger flag up here. This could be a bigger flag, and we could continue in this flag. You know, maybe this is the flag up here, and you know, you've got a bottom down here somewhere, and we're making this flag, and then your flagpole would be really from the top of this big breakdown. So that's kind of a bigger picture thing, but that would mean that what we saw last week and the week before was really the first leg down, and we're gonna get another. This is just rough, so you know, my levels aren't perfect here, but that would mean we're gonna get another leg down, putting us down here at 260. And again, this is bear market, you know, essentially territory. So once we start that, it's probably not going to just stop and do a V bottom reversal. It's probably going to do, you know, continue to go lower. So if that plays out, maybe this is our next target down here around 260. We hold, you know, put in another flag before making another leg down. So that's something to pay attention to. And let's look at the XLF here. The financials, these are interesting because complete, you know, collapse of the financials. You know, we were moving higher, sold off, and we're now back within this range down here. So resistance 25.94, we're almost there. So let's watch this on Monday, but 25.94 should be resistance. I don't expect the financials to get above that. They could easily intraday chop above it, but I think it's going to ultimately fail on the daily chart at 25.90 and move down to the next support, which should be down here at 23 bucks. Tesla, this thing just is a screaming short to me, to be honest, but it's a wild card. I don't like to, you know, this could just be a bull flag. You know, I can see that. You know, here's your flagpole, here's your flagging action, bull flag, move higher. I just don't see that in this kind of a market. But again, for me, this one's a no touch. It's just not worth the risk. You know, yes, there is some reward here, but I just don't like the risk here. Let's look at Microsoft. Microsoft. You know, you got this support line right here at 161.01, and it did recover that in the last hour on Friday. However, I don't know what the after hours looked like. It might have dipped back below. So we'll have to see what this one wants to do. Maybe it wants to do another back test. But even if it does, we still have this flag. I mean, you've got the flagpole here going down, and then you've got this kind of flagging action right in here, which tells me that, you know, we're heading lower in Microsoft somewhere down here, down around this 140. And probably, you can actually see we've got, you know, longer term support down here at 130. So that might be where we're heading. Apple, same picture. Apple has got support right here. If I can get my chart to pop up. There's your support on Apple. And we broke that. We've kind of been chopping around on both sides. We barely recovered it. So we're gonna have to wait and see if that's support or if that's resistance, because we're right there in the after hours on Friday. It might have closed right below it. So that's either going to be support or resistance, but it's right there. So all right, this video has gone long enough, so I'm going to wrap it up. If you guys are finding value here, give me a thumbs up, subscribe if you're new, and follow along. Go back and watch some past videos, and you'll get an insight into how I chart and how I'm actually anticipating moves. A lot of these calls I've been right on, some I'm wrong on. That's just the nature of the beast. We can't get them all right. But the bigger picture stuff that I've been pointing out for a while seems to be playing true. Kind of the macro thesis that I have has been playing out. Gold miners have been performing exactly as I've expected over the last year and a half. And so far we're good. So thanks, guys. I'll catch you guys on the next video. Bye.